Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed, alongside of me, my wonderful co-host, Becky Alley.
Hey, what's going on, everybody? Happy Saturday.
All right, Becky, great to see you. And, of course, our additional co-host is always the encyclopedia, the glossary of all real estate terms and mortgage terms, Lisa Lawson.
That's a really nice way to say I'm a mortgage nerd.
Yeah. You said it, not me, Lise. Fantastic. Hey, Lise, way to go and bring in Jack Dodd from Jack Dodd Homes, of course, signed Monahan office over there in Royal Oak. But you're an East Sider, really. You're like crossing over, man. You want to hang out with us over here.
Yeah, Macomb County all the way, right?
Okay.
Hey.
Well, Jack, I know you'll work all 5 counties. You're not afraid to get in there and drive a little bit out of the way to take some customers where they need to find the house in today's market.
I go where the sales are.
There you go. We'll talk all about that this morning. Becky, so much going on as always in the mortgage and real estate world.
Yeah, it's never ending. I mean, we haven't seen a market like this that's been ever changing. I mean, literally from one month to the next, it's changed. I mean, we went from everyone experiencing this severe FOMO, right? Where they were just like, there's one house and I have to buy it and right now and all the things. And now there's inventory. And I feel like some of these agents are going through this little like pivot time where it's either pivot or perish, where now they were used to be order takers. And now they're really like, you have a little bit more inventory on the market and you have to kind of set those proper expectations for the sellers.
Sure. Yeah, I experienced that myself. I just had a listing in East Point and I listed it early in the summer and we got 9 offers. And the offer that they selected, it kind of fell through after a couple of months. So we relisted it and we barely had any showings just on that same house. I mean, luckily we fortunately had a buyer come through and were able to sell it, but that was the drastic change from just those couple months.
Yeah, 9 offers to barely any showings, really,
Right.
compared to what it was. And that's huge. And I think certain areas are really seeing that more than others. There's always pockets of real estate. You know, if you're trying to move into Royal Oak or Birmingham, you're not probably going to have that same type of phenomenon. You might have a few less, but it's not going to be like, oh my gosh. But it's definitely kind of slowed down. Things are starting to equalize, normalize. Those are some of the words that we always use. You know, I wouldn't say we're quite there as 50-50 yet, but we're pretty close, I think.
Yeah, stronger buyer's market
Yeah,
out there. Definitely a little bit from what we've experienced in the last 2 years.
Yeah,
pandemic.
it's definitely still very much a seller's market, but buyers are able to kind of get in there and check some of their boxes. I mean, you're seeing more, before people would, take a pause and be like gasp at, someone asking even for FHA financing. And, it's not like that. You're even seeing concessions.
Yeah, and even in Macomb County especially, though, we keep saying it's still a seller's market. Macomb County is getting pretty close to being equal. I mean, it's becoming pretty, where it isn't necessarily a buyer's market or a seller's market. I think Oakland's still slightly more seller's market, but Macomb County is getting pretty close to being,
I got to say, in the past shows, we were talking about these great Octobers we would always have. We would write so many loans in August and September, really after people would come back from up north or maybe their summer vacations, and they realize, hey, I got to get the kids in a different school district. We were talking about it. Maybe this is the year to do it. I think we're going to still see some of that, and there are obviously lots of buyers out there. But again, we're talking a little bit more of a balanced market here in Southeast Michigan. Again, we'll talk about generally in Michigan what's going on, but of course across the United States, Becky, we see the same thing. A little bit of slowdown, even in the West Coast. They're talking about some price reductions out there a little bit. Not as crazy as things were even out on the West Coast.
Yeah, I mean, so I feel like in Michigan, like it happens on the East and West Coast and then it kind of comes into the middle, right? So we, even like great music, it comes out on the East or West Coast first before it hits us here in Michigan, right? So it's a little bit of that ripple effect. And I was at a seminar last week or 2 weeks ago at this point, and you had a lot of some of the biggest real estate agents in the country all over the place, right? And they're talking about in California, you're looking at their, telling their sellers, take the offer, whatever they're getting, take it, because that's depending on the price point. That's just the houses were sitting and they weren't knowing how to handle those kind of situations. Whereas in Michigan, the good thing that happens for us is that we are so affordable still. We're not priced out like we are in California or Boston, Massachusetts, right? It's, we have price points that people are not priced out as far as rent. Even in New York, I mean, you're paying $3,000 for a 1-bedroom apartment.
Studio.
It's freaking nuts. Yes.
I just had
we talked about these.
Sellers. They were nieces of a lady that had passed away, and one of the nieces was in Nashville, and the other one was in Dallas. And the listing was in East Point, and I suggested we listed at 150, and that was they couldn't fathom that. That was so foreign to them that a home could be listed for that low,
right?
Because they're so used to those crazy Nashville markets and those crazy Dallas markets. So they were just so surprised it was
But you actually get a decent house for that.
Yeah.
Obviously, you're showing up with a huge market analysis saying, look, this is what the neighborhood's selling for.
We're like,
Please.
stop jello. And you're like, what?
Yeah, they were like, you missed a zero, I think, in there.
Not quite. Hey, we'll take your calls here. 1 hour of the Hardcore Mortgage Real Estate and Business Show. The phone number, 248-539-9797. Also the same text if you want to text us a little message. We'll get back with you here. If you're buying or selling a house, Jack Dodd knows how to do things the right way here. Jack, it's welcome to the show again.
Thank you
for having me. It's been so much
me.
fun this summer because I think the weather's been really cooperative too. And then it sort of segues into here, even though it's a little cloudy today, Becky, boy, yesterday and the last few days, I think we're just going to have this wonderful fall buying season.
I mean, I feel like September, though, gets you in that last minute. Like right when you think it's fall's coming, it like this third summer comes. It's almost like our fourth winter that happens
Indian
all through
summer,
spring.
right? Yeah.
Yes. And so like the, Labor Day weekend, it was a little bit, chillier out. But now here we are. It's humid and it's summer and it's going to be summer through October, ideally. But I do think that, typically in October, I always see a lot of us that push, and the good thing about Michigan, too, is that we have become a 365 state. And, but now we're dealing with school is open again.
Yes.
And, we've been through, we've been pivoting ourselves as far as what our clients were looking for, the remote learning, and now everything's changed back to that normalcy. And, now people are a little bit stressing about what schools their children are going to go into. But, I feel like people aren't hesitating to put in those offers, but I wanted to bring up the fact that the bigger buyer pool right now is the 25 to 35 year olds right now. That's like 46 million right now that's in that pocket that are going to be these first time home buyers.
You know what's fun, Jack, is when you have a buyer and they've already been, pre-approved. You're putting your team together, whether I know you work with Lisa a bit here, and you guys have the strong buyer and their knowledge, they're educated, and then they really relish and understand everything involved, and it makes it so much fun. There's all the stress is gone. Sure. Having that approval letter, knowing you have that confidence to move forward, isn't that really the best buyers out there?
It's super exciting. I actually prefer to work with first-time home buyers because I like educating them on the process and the ins and outs of it. I think it's really fun to you see that excitement in their eyes and the passion of this is going to be my first home. So those are the buyers I actually really enjoy.
Yeah, I'm the same way. First time home buyers have always been my favorite, followed closely by vets. They're probably my 1 and 1.5, right? If I rate them, but nothing makes me happier than getting someone into a home and knowing that they understand the process, that 3 weeks after closing, they're not going to be, what did I just sign? Wait, I didn't know this about my payment. Like I want them to understand everything from start to finish, and nothing makes me happier than being there when someone gets the keys, and sometimes they get a little emotional and sometimes they think it couldn't have happened for them.
Right.
They may have, overcome credit repair or had a long time to save money because they are maybe paying rent. And so it's taking them 2-3 years to save for their down payment or wherever their situation is. Bringing that joy and helping someone get there is it's nothing greater.
See, I want to touch on that real quick. So I took a call yesterday from a real estate agent. So we take for granted, I feel like, the experience that our clients have, because we are so hands-on, because we do overeducate before, where we actually are punching them in the face, literally like with like knowledge of this is what you got to do. This is how you got to fix your credit. This is what programs you do and do not qualify for, et cetera.
Why,
right?
yeah.
So I had an agent there literally at the closing table. They went with a lender that does more advertising than good. Okay. And literally at the closing table, they call me and they're like, something is really wrong. We're willing to scrap this whole thing. Can you fix it? And what was happening was there's a gift of equity situation, but it wasn't supposed to be a gift of equity. They had all the documents completely wrong to the point that they decided not to close. And now they're going to be working with us. And I found out, and I looked at their information, come to find out they qualify for the grant, that conventional grant that we have right now. And we're one of 2 lenders in Michigan that offer this. Yep. And had they not had, the agent not known who we are and the reputation that we have, they would have closed. They would have had seller's remorse, buyer's remorse,
Right.
and the fact that they were really to squash it right there at the closing table and then reach out to us. I feel like that speaks to what we're putting out as far as how we're really truly, what you're saying is 100% true. Yeah. We are helping these people. We are changing their lives, and we're here to fix problems that sometimes they don't even know they have.
Yeah, absolutely. I mean, I literally just had a scenario very similar where someone called and they wanted to use the Michigan Down Payment Assistance Program to buy a family member's house that they've already been living in for about 4 years. That sounds like a great idea. But MSHDA requires max financing, meaning that you can only put the minimum down in order to get down payment assistance. The house that he was purchasing was worth way more than this aunt was willing to sell it to him for. And I said, let's restructure this as a gift of equity with 20% down, so you're not paying PMI, your payment's less. And we can still use the MSHDA program without down payment assistance, so you get the lower rate. So now you have a lower payment, lower rate, lower everything. And he was like, I didn't even know that was possible. So taking the time to listen, understand the full picture, so we can make sure our buyers getting into the best scenario possible for them is exactly what we're about.
All right,
Yeah, it's not
real
cookie cutter.
Right.
Real simple stuff here. We're going to help you buy your first house, your second, your third house. We'll make it an enjoyable experience. 248-539-9797. Keep it here. Alrighty, welcome back to the show. It's a Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation, NMLS 2289, Equal Housing Lender. Our special guest today, Jack Dodd, Jack Dodd Homes, signed in Monahan Real Estate Office over there on Woodward, just a little bit south of 13. Jack, I hang out. That's my backyard, of course, pretty close to our office. And the buyer's market, they got this little great window there where they can get in. Again, we give you 1 hour of this Hardcore Mortgage Real Estate Show. If you want to talk to Jack, 248-539-9797. And of course, Becky Alley, Lisa Lawson. Jack, there's this window right now, and we'll get to that real quick, where the buyers out there can take a deep breath and really learn this and get confident and then get out there and start looking at homes with you.
Yeah, and we're really starting to see, like we said before, where buyers have a little bit more of a shot than I think they had maybe a month or two ago, which is exciting. And I like to tell my buyers, think of me kind of like a GPS. I'll advise you, but if you turn a different way, I'll just catch up and keep advising you the way that you turned or the choice that you made. So
recalculating.
Yeah, exactly.
Like the ways of realty there.
Right.
Yeah, but that's perfect. I mean, I think that's what people need. They want guidance. They don't want someone telling them this is what you have to do, but here's your options.
Right.
You know, and giving them an education so they can make the right decision for themselves.
Yeah, it's not a dictatorship. I mean, you know, our job is to, like you're saying, advise you, right? And, you know, to give the options. And these are your boxes. Okay, so what's your wants versus your needs, right? And how many of those can we check off together? You know, because obviously if someone wants a pool and 3 acres and all those things, like it might come up, but it might take 6 months for a property like that to come up, you know? So it just depends on what is the actual I cannot live without and what can I live with, right? To get there. So
we always have these little elephants in the room. I know, is that an oxymoron, a little elephant in the room? The elephant in the room lately has been the forecasters and the predictors, and everyone wants to get out ahead of this and say, hey, I told you this and that's going to happen. Well, the lady who actually predicted it back in 2008, that little housing crash, things are different now. They're really different now. Potentially, there is some depreciation. Maybe that could happen for people, Becky, maybe that you were out at a conference recently, maybe in other parts of the country. I don't know about it here. The employment numbers look like, hey, there's a lot of people working right now and there's jobs available. So I don't think the dynamics are the same that gave us a housing crash in the past.
Yeah, the dynamics are definitely not the same. I mean, previously we had severe depreciation, severe unemployment rates. I mean, things were really kind of crashing and they happened very fast. Even if things aren't appreciating as quickly as they were, I think that appreciation is going to slow back to normal. We've seen exorbitant appreciation, things that are not normal in the past 2 years. And we've all kind of become used to it like that's the norm. And it isn't. Nobody normally makes $50,000, $60,000, $70,000, $80,000 on a house in a year. They're usually making a couple percent per year. And I think we're gonna go back to that. So I think appreciation will slow. And even if we do have a little bit of recession, it's not going to have the same impact because we still have so much equity in our properties.
Yeah, I agree with you. It is totally different. I mean, you have, if someone's in a negative equity position, it's because they paid $20,000 over what the house appraised for when they purchased it.
And they put minimum down maybe 3%.
Yes, I mean, so you have to understand that. I mean, anyone that was buying a home over the last 2 years, they were going above asking. Mm-hmm. They were stepping into it knowing that they're paying more than what the house was worth. Mm-hmm. And so if the house pulls back and you paid $280 and it appraised for $240, okay, and it stays at $240, well then you don't have a depreciating asset. You just overpaid. So there's a difference there. And it's not 2008. It's a totally different market. And I mean, you're talking about the conventional loan limits. I mean, look how much they've went up. So what that just basically tells you is that homes are appreciating. There is, people, their incomes are appreciating. I mean, you go from even just last year, there was a huge push of the conventional loan limit to $647,200, and now it's going to be bumped up to $715,000 allegedly, right? Mm-hmm. It's going to be official, coming up here soon. But those are signs that the housing market is appreciating, and Fannie Mae and Freddie Mac are getting in line with that.
And recognizing it, yeah.
And there's also not those same kind of bad loans. I mean, people were getting involved with negative amortization, stated income, stated assets. What does that mean? That meant that you had an 800 credit score, and in 2004 you could say, I make $1 million and this and that and the other thing. And those are the programs that got people into trouble, and Capital Mortgage Funding never got in line with that.
All right, let me throw this out there, Becky. You're doing the talking here for the Federal Housing Finance Agency, FHFA. Typically announces that. But yes, the information's already coming out there. They're going to increase it. They take a look at the HPI, the Housing Pricing Index. They figure it out each year, and boom, they keep increasing these loan limits. I remember when I got in a conventional loan, limit might have been $156,000 or something. Yeah. Here we are up to $715,000 coming up for 2023, and in a couple weeks here. I think we're ready to announce it next week. So this is, again, single-family housing. housing.
going into effect.
I remember when it went up to 415,
And that was a big
was
deal.
like a big deal in here. And that was just what, in 2015, I want to say.
So explain to people though that when we talk about these limits, it means that you can buy a house up to $715,000 before you have to worry about jumbo financing.
Exactly.
Okay, so what's the difference between conventional and jumbo?
Well, that's what we're talking about. So that's all about loan limits. So jumbo financing is when you need to finance more than the conventional limit. That's all it means. So if you need to finance more than $715,000, it's going to be jumbo financing. And usually jumbo financing comes with slightly higher interest rates, a lot of sometimes additional documentation. You know, it could
Definitely
be
more down payment, Lise, right?
Definitely
Let's
more
go
down
there.
payment.
Yeah.
You know, usually 20%. There are some programs as little as 10% for really well qualified buyers. You usually have to have more reserves, meaning you have to have money in the bank left over after the purchase. So there's more of these what we call, contingencies that you'll need to have met in order to get those types of loans. So, but again, the higher the loan limit, that means all those contingencies, come less and less you have to worry about. You can buy a house $715,000.
3% down.
3% down. That's crazy. But that's what I'm saying. It makes it affordable. People can come up with that.
What about FHA? Hasn't the limit?
Yes, it was.
Yes,
I actually
correct.
did the math
Thanks-
for you.
thank you.
Good job. 65%
Thank you
is
for doing our job.
715
Yep.
will be 464,750.
Wow.
I had nothing better to do. So Rick just wrote it down.
I mean, that's a lot.
So, yeah.
464,000 and change.
And you could
for
just have over
FHA.
I mean, a few years ago,
600
it was
credit
much,
score.
I
Yeah,
remember
like
it being
two-
much lower. Than
Yeah,
that.
you're right. It
I'm
was like
glad-
270 something.
I'm glad you brought it up,
Again.
Jack.
Yes, thank
why
you.
FHA, Lise and Becky, of course, is because FHA has that lower credit score allowability, and sellers' concessions are allowed. There's a lot of reasons moving forward that someone might just fit into an FHA loan versus conventional. Maybe they had a foreclosure or bankruptcy that you
Right.
just can't wait it out another 7 years and stuff, and they want to go buy a house. So good stuff, Jack. I'm glad you dropped that. That FHA's
Yeah.
loan limit will also go up, helping some families who had some problems
They
in the past.
typically announce it later on, like they announce it after, conventional limits. They kind of wait. They
Usually
maybe
next
a couple
year.
months. Yeah. They're
It's usually
definitely
January.
going to wait. But I literally just had a
That's
conversation with a buyer just yesterday. They're talking about, well, I want to be conventional, and one of these houses I like is only taking conventional financing. Why do you think that is? And he just cannot go conventional. He had some things, as far as his credit history. So FHA is an amazing vehicle to get you where you gotta go if you have blemished credit or less than perfect history, right? It's still, at the end of the day, money is money. And if a home is not particularly taking FHA financing, it might be because there might be something wrong with the property. Not like bad, but maybe there's a handrail missing. Right. Maybe there's some chipping paint on the garage and the sellers just don't want to do it. So I feel like in those situations, like I'm sure you would reach out to the selling agent and say, hey, why is it that you're not accepting FHA financing? And if my buyer's willing to, fix these repairs, that's something that someone like you is going to reach across the aisle.
Yeah, and I mean, even in multiple offer situations, I had one over the summer, and there were cash. The FHA was by far the strongest offer, and if you can wait a little bit longer, then why not? I mean, you're getting more money at the end of the day, like you said, money.
Right, you might not be able to close. You might need 4 weeks to close instead of 2 weeks. But what's 2 weeks if you're getting an extra 10, 20 grand?
And if the buyer's willing to make any repairs, and honestly, in my experience lately, there haven't been a whole lot of repairs that have been required anyway.
Yeah, I feel like the FHA, I mean, anything that's going to be health and safety, regardless, it's going to be cited whether it's FHA, conventional, or VA. I mean, you're never going to get around mold in the house.
Or peeling paint. People think peeling paint is an FHA issue. Yes, FHA expressly calls that out, but the reality is if you have peeling paint on a house that you're buying conventionally, still has to get looked at and remedied.
Or Lisa and I just had one with a crack in the basement.
Yeah.
That was conventional. They flagged that. We still had to have a inspector take a look at that.
Sure, you're going to definitely want to get anything double checked.
Or in the
structural.
Exactly, structural
so I just
integrity
feel like
of the house.
FHA went through like this unnecessary negative stigma, and in reality, it was so unnecessary. I was out here
because
fighting
it's
for
no
the FHA.
different. Yeah.
No, it's not, and it's amazing because you can help someone get into a house. You can go as low as a 580 FICO score. That is amazing, and you can have minimum down. And now once they increase these loan limits, that's going to now again open the door because it's all about affordability. If you can afford a $1,500 rental payment, we want to make sure that you can afford your own home at that point, because why pay 100% interest if you can pay something towards yourself?
All right, I'm just going to go backwards a little bit here. Yeah, we do this show real specifically in our 23rd year to give home buyers all across Southeast Michigan, anyone who's listening, some great knowledge. We share this knowledge. We're so prideful of it. You know,
we're passionate about it.
We're passionate. We have this pride. And again, we just didn't start last week. You know, it's so funny. I watch all these new podcasts and stuff. I mean, a little heads up there to the new agents and the new loan officers. Folks, this has been going on. You didn't reinvent anything.
Right.
The mortgage industry has been evolving to help people. Now, there are a lot of things that have changed in it over the years, but nothing's really changed. Becky, as we talk about debt to income ratio, the documentation that's needed, someone needs to have good credit. These are the basics of getting a mortgage, home ownership, and having shelter over your head.
For sure. I mean, and the sooner you have the conversations, the better prepared you're going to be.
Yeah.
As soon as you get yourself in line with the right professionals, all that matters. This is not going to be especially in this market coming up, or the one that we're even in right now, this is not click buttons and get a mortgage, because that's when it falls apart on the table, and I literally took that call yesterday. So it's about boots on the ground. It's about having someone that is plugged in, dialed, doing this every day, and then you can call at any moment, and they're going to be there to answer the phone, answer those questions, and get you hooked up with the right people.
All right, we got tons to share with you here. You're listening to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. Give us a call, 248-539-9797. We'll be back. We are back. Welcome back to the show. 9:32 if you're just joining us. Again, the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Fund. You can reach us at Capital all day long, all weekend long at 1-800-LOW-RATE, the best mortgage banker. That's 1-800-569-7283. A lot of numbers to remember. Of course, always here at 97.1 The Studio. It's 248-539-9797. We like to hear from you if you're buying or selling a house. If you have a situation where you just bought a house, we'd love to hear and congratulate you and hear about all the great things that went down on the transaction, or the opposite. We've always helped people, Becky. The call that we get outside of here, of course, during the office during the week are very interesting still when we find out that families aren't truly approved, aren't getting their documents together. We're getting a lot of clickers out there, and that's a great thing, okay? They're selling your names and numbers, but what we're trying to do is get these families prepared for home ownership. If you're serious about it, we need to get you off that Zillow clicking.
Oh, for sure. I mean, honestly, we get calls all the time from buyers that really aren't pre-approved. I mean, they walking around with this pre-approval letter and then they get hooked up with their agent and the agent suggests maybe getting a second opinion. And more times than not, we're looking at it and no, they don't qualify for the down payment assistance program that they thought they did. They just were walking around with this piece of paper that meant almost nothing. So then we have to kind of work backwards, and we'll be the second, third call in as long as we're the last call, and that's fine. We'll deal with that. But it's unfortunate though, because when you as a buyer, you don't know what you don't know, and when you're online and you're clicking and no one's really like answering your direct questions, and you're like, oh yay, I'm approved, and then come to find out things fall apart, and they really are. They truly do fall apart. As much as we don't experience that, but people are experiencing it. So get the call. Take the second call, get the second opinion, because if your credit score was pulled over the last 45 days, we can look at it and it will be one inquiry. It will not have a negative connotation on your credit for a second inquiry, because sometimes you got to make sure that you got putting out the good vibes.
Lise, we're going to touch on the MSHDA, of course, had some changes this week. We'll talk real quick about down payment assistance. Of course, many of our clients are, in the jumbo world, and we're going to get into vacation homes and talk about all sorts of our socio-economic status that we all have to deal with. Is, sometimes a first-time home buyer is looking at that $90,000 to $110,000. Well, MSHDA had some new changes.
Yeah, so MSHDA on Thursday increased their rate for down payment assistance and without. So the new rate, if you need assistance, is 6.125. Without, it's 5.625. Both of those rates are phenomenal. And you get, depending on where you're buying, you can get up to $10,000 with the MSHDA program towards down payment, closing costs, taxes, homeowners insurance, prepaids. That means if you've been trying to save because someone told you need $15,000 to get into this house, they'll give you 10 of it. That means you only need 5. That's huge. So you sales price can't exceed $224,500. There are income qualification. So if you're making $200,000 a year, you're not going to qualify. But give us a shout. We'll walk you through it and we'll see if you qualify for MSHDA. But, MSHDA is not the only down payment assistance program.
Right on.
There's a Chenoa fund that gives down payment assistance. There's a lot of local cities that offer, like Port Huron and others that give down payment assistance. There's also National Faith Home Buyers. There's so many programs out there. So people call and think that there's only one option for them. There isn't. But give us a call. We will help you and figure out the best program.
All right, look, sometimes even that real estate agent's a little concerned about, not all of them. I talked to one guy, he said, I closed 5 of them. He's never closed one of them, he couldn't answer anything. And sure enough, it takes a little bit of more patience here, because the state of Michigan, again, Michigan State Housing Development Authority, Becky, they got backed up on it. Everyone needed it.
Yeah.
I mean, this year's like everyone was overpaying. I want to be a homeowner, don't want to miss out. They're taking an extra 3 weeks.
Yes, for sure. And so like when we're getting these purchase agreements, I actually took 4 right before they announced this rate hike. So I was like pressing all the buttons to get them secured. The previous rate. So we got them secured, all that fun stuff. But, I reached out to the listing agents and said, look, I have this contract. This is MSHDA financing. I'm looking at this PA date. We're not going to make it not because of a capital mortgage thing, but because MSHDA requires their second audit. They do their own audit. They do their own underwrite on the file, and that is taking 3 weeks. Now, once we have control over it again, that's perfect, but a normal transaction could take up to 30 days, right, just to close anyway, and then you add another three weeks on top of that. So it's just setting those proper expectations. And I touched on it earlier in the show too. We also are a pilot program. Capital Mortgage Funding is for a conventional grant, and you have to qualify income wise, and your property has to qualify.
Right.
So that is something that we cross-reference once we have purchase agreements to see if we can maybe put this in there. And that one transaction that I was able to save, they did qualify for the grant, and the property qualified. So therefore, they're getting $8,750, which is beautiful. So
but they don't have to pay back. That's
they
different.
do not have to pay it back. You're
ever.
right.
So a lot of these programs with down payment assistance, people don't realize that when they get this assistance, most often it comes up as a silent second lien on their property. So they don't have to make a payment, and it might be zero interest. But that means when they go to sell their property, when they go to list it with you, Jack, in 5 years from now, the first, whatever money amount they got, we'll say 10 grand. The first 10 grand that they make has to actually go back to pay back MSHDA in the case of a MSHDA loan. So this other one that Becky's talking about, there's no payment. It's literally true grant money. That's huge. And there's not that many of them. Might be one of the very few that we've even got left that's a true grant.
Yes, it's a true grant. And, especially the downriver areas like your Taylor, Southgate, those are definitely in that census tract where they are literally trying to focus on getting people into affordable housing. And so give us a call. If you're looking in those areas, reach out to us. We're here. We want to hear from you even today, 248-539-9797. If you were looking over the summer or last summer and you got out, what has your experience been? I've had someone that was looking for 2 years and then finally got their offer accepted because the market changed just like that.
Hey, everything changed in your life, your needs, your wants list. Jack Dodd, I got a new love, and I know you're on my side of town now. Jack, I was out on East Side up in Fairhaven. Got a chance to get out there on the big water on St. Clair with some buddies in Anchor Bay and the North Channel. I fell in love with it, man. So it's like, your needs and wants can change real quickly. I'm an inland lake guy, and a little salute out there. People are buying these lake properties. They are going like gangbusters. So
Lisa and I were even talking on the break. There's rural development programs for people looking in rural areas that, they may not know about.
Which is literally like 2 miles from my house because I live in the boondocks in North Macomb County.
But it's not, though.
It's not. That's what I'm saying. But people think rural development, you have to literally be
in the boonies.
Right. But it's not. It really isn't. I mean, I live at 23 in Hayes, and literally just north of 23, you can qualify.
Again,
and
you got
it's
a
0%.
0% down.
Zero down. We'll talk about those closing costs and prepaids and some money that's involved in home ownership. Of course, I always talk about the three components of home ownership. You have this down payment, unless, of course, it's a zero down program. And then you got your closing cost, and then your prepaid items are this interest adjustment, your escrows for taxes, and homeowners insurance. So it's really still three components of home ownership to make it happen. We'll teach you all about it. I want to get into something also, Jack. Most of the buyers nowadays, enjoying that process, just getting excited about it. We're bringing it every morning, and people say we're rumbling out. We're trying to get this motivation out there because there's all these great opportunities now. And I'm feeling this window. Again, we're going to start talking about vacation homes here in a little bit, but an opportunity where people who used to just buy vacation homes, Becky, they turned into a whole business with this Airbnb stuff.
Oh, yeah. I mean, Airbnb is definitely here and not going anywhere because people are wanting to find ways to capitalize on their investments. And, and a second home is categorized as you have to occupy it some of the time. And so some of the time is what? 3 months, 6 months. I mean, it's kind of like a vague thing, but you can, if you're not utilizing the property, you can rent it out. And, I'm sure you're seeing some people that they are, do you deal with a lot of investors, right? They're looking to make that money. And when there's talks of housing bubbles and recession, history shows that real estate does, sustain its mailbox money. People are looking for that if their portfolios are tanking with these stocks, right? Or whatever's happening in their 401ks.
Yeah,
right?
my investments
real
are tanking.
estate, it's still mailbox money because people are paying for it.
Right.
Yep.
Even if your home appreciates, okay, so if we go down to single digits, for the doomsdayers out there, the flat earthers out there, if the market changes, okay, it could change to single digits. Becky, 3, 5, 7, or 9%, those aren't bad returns. In fact, a lot of us would take those on our investments right now on our 401ks, our Roth IRAs and such.
Yes. And so if you're so inclined and you can buy what's on stock right now, I mean, they are talking about we're entering into a economic winter, but if you are in a position where you can, take advantage of that, you're going to come out once this cycle shifts back again. History tends to repeat itself, right? Where it's been it's been 12 years since we've seen the last cycle, right? And they spent a lot of time getting rid of all the bad transactions over the last decade. So here we are. We're seeing a rate cycle. These rates are not going to stay here forever. We will see opportunities to save money again.
All right, keep it here on 97.1 The Ticket. It's the Hardcore Mortgage Real Estate Business Show. We'll be right back.
what they're worried about.
Alrighty, we are back live. Welcome back to our show, 945 here. It's the Hardcore Mortgage Real Estate and Business Show. Again, brought to you by Capital Mortgage Funding at 1-800-LOW-RATE, the best mortgage banker. I'm Harvey Freed, Becky Alley, top 1% of all loan officers, and Lisa Lawson, who knows more about mortgages than anyone I know other than Becky. Fair enough. 248-539-9797. If you want to call on the show, of course, we always give you 1 hour of the Hardcore Mortgage Real Estate Business Show. What are we trying to do here? We're trying to get you guys set up for success. That's right. So many of our clients over the years have just been really successful homeowners. And I'm really passionate about it. I can go back 28 years and almost pick out any client that calls me, and I could remember when they either bought that first or second or third home and all these great stories. And Becky, that's one of the things. We haven't touched on it in today's show. Of course, refinancing is something that happens for a lot of different reasons. Of course, during the pandemic, we never saw these low interest rates. So that was a rate and term refinance. But now we're seeing some cash out and some consolidation stuff.
Yeah, I mean, the last couple of years, we've saw the rates in the lowest of the histories of ever, right? Now we're back up to the rates where they were in 2006. The reason why I know that is because that's when I bought my first house, and that's where the rates were. They're about 6.25%. So there was a little bit of this like panic, or I don't know what you want to call it, but some kind of emotional feeling of what the rates were doing because they did move so quickly. But what people need to understand is that the rate changes were supposed to be happening in 2020, and then no one predicted COVID-19 and it being the dark horse of making the opposite happen. So even in 2006, we'll say when the rates were this low or around the same time, there was opportunities several years later to refinance. And in 2018, the rates were back up to 4.875 after they dropped in the threes, right? And then in 2020, we all know what happened. They dropped significantly, right? So we are in a cycle. So these are not going to be here forever. We don't know how long, but we did predict that the rates were going to be this high by the end of the year. They just went up really, really fast in a short period of time.
Happened a little sooner than we thought. We said by the end of the year, we didn't realize it was going to be like next week. But,
yes. Yes.
It isn't shocking to us. We knew that it was going to happen. It isn't.
But people were shocked. I
mean,
yeah,
they were.
So the ones that have been in the business less than 10 years are like, oh my God, I didn't even know this was happening.
What happened? Right. I didn't lock those people in. Oops.
Yeah.
So
Had
I don't
those
know.
Before.
It's crazy. But the point is that regardless of what the rates are, there's still opportunity to save money regardless of your situation. So if you bought a house with Jack over the last couple of years and now you're slapped all the paint in it and you finished the basement, well, now you're a little bit in credit card debt because the interest rates on credit cards have also went up. So in certain situations, cash out refinances do make sense. If there's a divorce situation, you need to remove someone. So people still very much are refinancing. I probably have several of them even just in my pipeline this month. I mean, but it's situational. It makes sense. We're not here to help you make your house be a piggy bank. However, it is your biggest asset that you can use to your advantage.
Let's go ahead, Lisa.
Well, I was going to say, I mean, I just worked with someone the other day, and we are doing a cash out refinance. They have exorbitant credit card debt. They had a situation happen. They told me they were relying on credit cards. They didn't really have any other alternative at the time because it kind of happened. They lost their job unexpectedly, had to live off credit cards for a few months.
Things happen.
Stuff happens in life, and so, they were using the unemployment checks they were getting to pretty much pay the mortgage, but, stuff happens. So now we're doing that. We're saving them, about $700 a month. So that's huge for interest, and we're doing a 15-year loan. So it's not like they're going to be paying this back for 30 years. So sometimes it makes sense. Everybody's situation is different. We don't want to put anybody in a situation that isn't going to be beneficial to them. Yes,
we will not. Never. I'll say no. I'll say no.
Yes.
Always hoping that the rates will stabilize. Of course, just like in any market, we like a stable market, and job creation's been very good there. So we see things moving in the right direction. Existing home sales are going to be out, of course, September 21st. So we'll see what August looks like. I think they're definitely a little bit slower out there, Jack, but a lot of fun. Let's talk about how fun it is to buy a house. But first, well, you know what? We will go to this call, Jack. Let's see if Daniel has something to say about home ownership. Good morning and welcome to our show, Daniel. Are we going to go to that? Oh, here we go.
Yep.
There we go. Hey, Daniel, welcome to our show. Good morning.
I have a question. I've got a purchase agreement with a seller. And after I sign the purchase agreement, I have the home inspected. I have it appraised. And there's some issues. I've got I find out it's a lake access home. I find out that it's in a floodplain. Now I've got to get flood insurance.
Yes, sir.
I find out that there's some drainage problems from my inspection, showing that the inspector said that the grade will allow water to come back to the home, and it's going to flood or have water problems in my basement. And he said that needs to be addressed. I want to get out of this contract.
Daniel,
Is that a
yes,
problem?
we're gonna answer this question for you, and of course, I'm gonna let Jack jump in with a little bit, but let's go there right. Daniel, that beginning of the transaction, the purchase agreement states that you have 7 to 10 days to get this home inspection done. Right in that time frame, you get the inspection done, and there's some issues. You mentioned the drainage, Becky. What else did he mention?
You're in a flood zone. He wasn't
a flood
expecting
zone.
that.
He didn't
but-
know that.
Flood zone.
Was the flood zone not on the seller's disclosure form?
The only thing that was on the disclosure was it asked if he had flood insurance, and it said no.
Okay, that
It
might have
didn't say
changed.
that it was a flood. It did not say that it was a flood area.
Okay, those flood zones do change,
Yeah,
though, right?
it might have changed, yes.
All right, they might have changed.
Or
look,
it could have a LOMA or a LOMAR, which you have to look up
You-
specifically, and that's a more complicated process.
well, look, there's a lot of moving parts
Yeah.
here. Jack,
guess,
I'll let you
yeah,
jump in,
I'm-
and then I'll
I'm
follow.
wondering if you're still within the inspection period. Do you know?
No, it doesn't sound like it because you got your appraisal done. What are you, like 3 or 4 weeks into this transaction, and now you're getting cold feet because you got all these new things, Daniel? Is that the truth?
That's the truth.
He can get. Can he get out of it? How much is your earnest money? I'm just curious. How much is your earnest money deposit?
$1,000, $1,000.
Okay, I mean, well, you know, what you want to first.
I know I probably lose that, and at this point, I don't really care.
All right,
I
so
mean, $1,000.
how long have you been in under contract?
I can't tell you the exact date, but it's been 2 to 3 weeks.
Yeah, about 3 weeks now.
Okay. I mean, so number one, you need to, talk about these concerns with your real estate agent, right? And I feel like Jack would kind of back me up on this. You need to talk about what your concerns are. Number two, the grading issues, right? You need to find out what the cost is to fix these things, right? Is it a simple, like you can fix grading to get the water away from the home, or is it going to be a huge expense? And maybe, I don't know, you can ask the seller for a concession at that point, see if you really, really like the house. But what Lisa was also talking about is if the original seller did not have flood insurance, right? And maybe they readjusted the floodplain, so now you're coming up in a flood zone. You might, if I'm on a lake, I almost would want flood insurance just in case something did
Well, you
happen.
can only get it if you're in the flood zone,
Well,
so
yeah,
he's
but-
going to need it.
Yeah, but sometimes you can just get the extra coverage, but flood insurance is not as expensive as people think it is.
I think it's maybe $1,000 a year.
It adds
I've
$50
researched
to
it
my
for different
payment.
properties.
How much was it? 50?
It's $600 a year, so
Yeah,
that's
it's
$50
not
to my payment. That's $50 that I did not expect.
Do you still love this
Also,
house?
It's not.
We want to keep them on for a while.
It's a lake access house. It's not on the lake.
Yeah.
Oh, so it's like you thought you're getting lakefront and you just have lake access. Is that what's happening to you?
Yeah.
Okay. So
And now all of a sudden it's in a flood zone. I'm like, what the hell?
So
Pardon my
there's
French.
other things you can do. You can get an elevation certificate, and to see if the flood insurance can be removed, that requirement, depending if where it's at on the property, and we have to get a surveyor out there. Sometimes they've already been completed, and then if the person before you didn't have flood insurance, there's a chance that it might have already happened. The previous owner could have gotten that. They're called LOMA and LOMARs, and they can be looked up on the National Flood Insurance Program's website with the property address. So we'll make sure to get your information and give you a shout back, and we can look it up for you. And then you can make an educated decision at that point if that's something you still want to pursue with this house, if its flood insurance is really required.
Daniel, you get the last word. Go ahead.
I was told that if the buyer, if the seller had purchased the home for cash, if you buy it for cash, you don't have to have flood insurance.
Well, that's because there's no flood cert
It's
on.
my lender,
Wait,
it's my lender
yeah.
that's requesting it.
Well, you don't need homeowners insurance too, and your house could burn down to the ground. Yeah, if you don't have a lender involved, of course, in the criteria, and that's how you're not getting all your checks and balances. Becky, that reminds me, Dan, it's a great call. There's so many moving parts. I'm going to call you after the show. Becky, reminds me of everyone buying these houses for cash. They had to get title insurance on it. How can you buy a house for cash for $300,000 without getting a title insurance policy? So it's sort of the same thing, not doing your due diligence.
Yeah, I mean, people were just, I don't know, throwing rocks and seeing where they landed, but they're putting themselves in bad positions. So if you're paying cash and you don't have homeowners insurance because no one's forcing you to have it,
Or
okay,
you don't
well,
have
you're putting
flood insurance,
yeah,
you don't
flood
know.
insurance, you're putting yourself at risk. And, so these are things that, and I feel like for whatever reason, I don't know who his agent was, but we'll definitely get him, we're going to talk to him after the show, but it feels like he just maybe got maybe some bad information. We don't know. Or maybe he knew it and he just, is kind of backing out of it. Who knows? But we're definitely going to reach out because that does happen, though. This is what we're talking about. Buyer's remorse, seller's remorse. People are getting excited. And then once that happens and things are coming into fruition, they are getting cold feet. That is exactly what is happening right now. And I know you can attest to that.
Having a really good home inspection done and really a thorough looking at all areas
and who you're surrounding yourself with, your
issues
team. If you don't have a good team around you, these are things that you're supposed to have in the beginning of the transaction, not 2 weeks into it.
Becky, I'm a lake expert. I'm sick of people telling me they're experts on stuff. They know I've lived on a
You
lot
live,
of
so
lakes.
you
I've
live on
lived
a lake.
Okay, stop with the nonsense, folks.
Yeah.
They're not experts. He put first of all, come on, he's buying a nice house. $1,000 EMD. That's weak on behalf of the seller. Poo-hoo on the listing. You want me to go on with all these? I got a lot of poo-hoos out there on this one. But we'll call you, Dan, definitely. There's another call. We'll definitely talk to that person after the show here. And we appreciate anyone who called in. Hey, guys, that's it. So we want to thank everybody. Definitely Jack Dodd
Thanks for having me today. So
Jack,
much fun.
Outstanding. We'll make it more fun. And of course, it's the fastest hour in radio. Becky, Allie, for sure. Always want to thank for your expertise. Lisa Lawson, the great Lisa Lawson. I see Pat Caputo out there. He's got sports. We got sports here all day on the tickets. So keep it here. We'll see you next Saturday.